Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a breakout above the recent high of 50.75, which led ES up towards the 62 and 64.75 resistance levels where responsive sellers have been active. At this point, heading into the open, we will be using the 48 to 51 zone as the micro bull bear. So as long as ES is holding above that zone, we know that the overnight breakout is intact, but the larger time frame bias continues to be bearish, and in an overall bearish market, breakouts tend to fail, or at the very minimum attract sellers at the next resistance area, and we've seen that already in the overnight session. So we have to be very cautious on the long side up here because even though we are in a breakout scenario, there is some decent overhead resistance, and sell side can be active on first test of pretty much every resistance area along the way. So even if we get some continuation here, the sell side can still step in at 68 to 70 at the 71.5 gap, and then we have some better resistance zones up at 80 to 82 and 86 to 88.5. So there is some upside potential if there is some good momentum behind the move. So off the open, the main thing to look for is whether there is actually broad market strength. So keep an eye on the Russell because so far, even though it has moved a bit higher, it's still stuck in the recent range. It hasn't actually put in a breakout, and it has some overhead resistance as well, some pretty decent resistance at 1152 to 1155, which can be a hurdle. And with Nasdaq, it's a similar situation where it put in a overnight balance breakout, and it has a little bit of upside potential, but then there is some overhead resistance above, which can definitely stall this current breakout scenario and the current rally that we're in. And we know that when the market is bearish, there can be some pretty vicious rallies and some pretty violent upside moves too, just with the expanded volatility. So that's completely normal, but the sell side can still step in at pretty much any zone, and for that reason, we have to be very careful and very cautious on initiating any new longs at these higher prices and be on the lookout for a potential failure at one of the resistance zones this morning. So in order to confirm that failure, we would have to see a move below 48 to 51. So a breakdown below 48 to 51 would signal a failed breakout attempt, and then from there we can go down to the gap fill at 38 and test the initial support zone 33 to 35. The buy side can be active there on first test, but if we're going on a lot of downside momentum and it's a completely failed breakout scenario, then initial support does not have to cap the downside, and we can go down towards 19 to 21 half. So 33 to 35 and 19 to 21 half are the downside objectives in the event of a failed breakout scenario. On the upside, there is, like I said, a little bit of upside potential here, but we do have resistance at 68 to 70. Open gap 71 half has potential to get tagged if there is some decent upside momentum off the open. And then we have resistance 80 to 82 and 86 to 88 half, and the expectation is for the sell side to be active on first test of every resistance zone along the way, and it can actually lead to failure, right? So on the larger time frames, testing one of these upper zones, especially the 86 to 88 half, doesn't just have to result in a sell response. It can actually result in complete failure and a pullback to 48 to 51, and then possibly even lower. Let's just look at some of those zones above in the event that we do get some crazy rally. So above 86 to 88 half, we have 95 to 96. 2075 to 0275, and 06 half to 08 half. So just to cover those, and then on the downside, in the event that we break 19 to 21 half, which is pretty decent support, it's yesterday's intraday breakout area. Then from there, ES can go down to 09 quarter, 04 to 06 half, and then in the event of strong liquidation or strong downside momentum and selling, the 92 quarter, 94 quarter zone. So each of these zones can technically come into play depending on how the day shapes up to be, right? So that's something that we will have to gauge in real time. For now, the structure that we really have to focus on is really over here. The 48 to 51 off the open is going to be important. On the upside, the overnight high around 64 half, and then the 68 to 70 zone, 71 half gap. These are really the zones that are currently in play and in focus. And then depending on how the market reacts to these zones, we can project out a bit and anticipate the next move in the market. But micro bull bear 48 to 51 is really going to define the bias on the day time frame. But the larger time frame bias continues to be bearish, regardless of some short-term rallies that may happen along the way. So those are the main ideas heading into the open. We're going to continue to be careful on the long setups here. And as long as we're not getting some crazy upside momentum off the open, we will still look for short setups anticipating a failed breakout. But we do want to see some signs indicating a failed breakout. It's not just blind shorts in the face of strong upside momentum. You do want to see something. And once the turn starts, then we know there's so much volatility that you can just short the pops and then look for a continuation lower. So that's the context we're in right now. Let's see if the sell side can step in off the open, and we'll take it from there.